Hello and welcome to another Smaulgld live cast. Today is Thursday, September 27th, 2018, and today we're going to talk about another 1,193,927 ounces of silver left the COMEX vault in the most recent report. Let's take a look, though, first at what is going on with gold and silver. On your screen, you see price of silver today, 24-hour silver price. We had a pretty high open at 1446, but as the day went along, we went down. It went as low as 1430, bounced back to about 1434. Gold did not do much better. In fact, gold has been not performing as well as silver in the last few days. We're going to take a look at that. In fact, there's some interesting news on gold that I saw in CNBC. I'm going to share that with you in a second, but let's take a look at the daily gold price today, September 27th. And gold opened at 1194.86. Didn't manage to get much higher than that, and then pretty much collapsed down to 1182. Currently it's around 1183. So both gold and silver, not a good day today. The dollar had a very good day. The dollar index was up to about 95. It's a big gain in the dollar index. I think that's coming off it's a delayed reaction to yesterday's Fed announcement that they raised rates now to the 2% range, and that they're going to continue to raise rates. So the dollar did rally. The dollar index went up from 94 and about 94.21 all the way up to 95.02. Surprisingly, though, with that increase, you also had an increase in the Dow Jones and NASDAQ and the S&P. So the rising interest rates did not seem to impact the stock market, at least yet. So we had a big increase, especially in the NASDAQ and the S&P. The NASDAQ was up 0.65%, S&P up over 0.25%, and the Dow Jones up about 0.2%. But let's take a look now what this gold and silver price action has done for the gold-silver ratio. Gold-silver ratio has been creeping down the last couple of weeks. It had reached a peak around 85 to 1. It's down to about 83 now. It had dipped all the way down to 82.87 to 1 earlier today. But it's not a good sign when gold and silver are falling, and you're relying on the gold-silver ratio to come down on the basis that gold is falling faster than silver. That's not a positive sign whatsoever. But here's the interesting thing that I hadn't noticed, and I'm going to show you the historic. This supposedly hasn't happened in 30 years with gold. It is I'm going to show you the price here. I'm going to show you the chart, and you tell me what is interesting about this 1-year gold chart. And I mean, doesn't look good, but it doesn't look historic. It doesn't look like something that maybe hasn't happened in 30 years. Let's take a look. Well, what hasn't happened in 30 years is the idea that gold has gone down 6 months in a row. If you look at that there, if we close out September below 1205 or so, it'll be 6 months. If you go back, you can see the peak was in May, and then you got the price of gold going straight down. So some are saying this is one way of predicting a bottom, meaning that gold doesn't go down 6 months in a row. But let's compare that to the price of our silver. And silver actually has done a little better over the last 6 months. Silver price has had some peaks and valleys, but we're really looking at June as the peak before it started falling. We also have a nice uptick off the bottom. You can see there that little cup forming all the way up to 14.45. This chart does not include today's, has not been updated today, but you can see that it did manage to rally in June so that the decline started then. And that's actually this long period of time of declines is what I was mentioning when you look at the COT report as to why the commercials had gone long, because as we've discussed, and we'll see probably on Saturday I'll cover this, that generally the commercials are net long, net short, and the non-commercials are net long, and then as the price rises or falls, they start to sell off their positions and they begin to go in the other direction. But what happened in this long stretch here is the commercials were net short, but because they were net short for so long and the non-commercials were net long for so long, they finally, after months of selling off their positions and winding them down, they each had to flip their positions and go net short and net long respectively. And we've seen the last 3 weeks, and as the price has risen, we've seen the commercials that were net long cutting back on their long positions as the price has risen to cash in. And I suspect if the price continues to rise, within a week or two, the commercial will be net short again. Okay, so that is it there on the gold and silver price, I believe, for the charts that we have. Yes. Now, the other thing, we wanted to mention the cryptocurrencies today. Something is afoot, I believe, the last couple of hours, just the typical volatility, but the crypto markets have been on a 2-day tear here. Bitcoin Cash has gone almost up $130. It's now at $570. Bitcoin itself is at 6,700. It's up about 4% today. Ethereum at 229, up about 6%. Litecoin was up about 13-14% today, went all the way up to almost 65, is now at 63.55, and Ethereum Classic at 11.45. Now, we have been tracking JP Morgan, the silver, at COMEX vault, and there's been discussions as to who that silver belongs to, whether they've taken it in their name, whether it's all theirs, whether it's some of theirs, whether it's partially theirs, whether none of it's theirs. But we have been tracking that back on September 8th, we were looking at the amount of silver in the COMEX vault, and we saw a very large amount of silver, 145 million ounces, 145,408.90 ounces. And the significance is that it really pretty much doubled since 2016. You can see when it was just about, in July of 2016, it was about 70 million, and then bingo, all the way up to 145 million. Led a lot of people to say, oh, JP Morgan is hoarding silver, other stories about other silver they may have. But this is the only place where one could possibly point to something and ascribe ownership possibly to JP Morgan. Anything else is speculation. As we know, what's in SLV is not JP Morgan silver. They act as custodian. They may have control over it, but no one asserts that they own that silver. Some could assert, you can't prove or disprove, that this silver here belongs to JP Morgan. But I would tend to think that it doesn't. But when we also looked at the beginning of the month at JP Morgan's silver stock, I also wanted to point out at the time that there are other large depositories that are COMEX approved vaults, and they were Coins and Things and Brinks. Now, Coins and Things at the time had 39 million ounces worth of silver, which was quite remarkable because also since the middle of 2016 in July, they had even less. They had about 5 million ounces. So their increase to 39.8 million ounces in the beginning of September was a dramatic increase in the amount of silver that they were holding in their vault. And most of their silver was registered, meaning available for sale. It wasn't just eligible, meaning that it was in those 1,000-ounce bars, good delivery bars, but that it was ready for sale. And that went up to about 39 million at the beginning of the month. And the other one I wanted to look at, or we did look at back at the beginning of the month together, was the Brinks. For all heard of Brinks, they have a lot of things and valuables they hold. But under this circumstance, this is their COMEX available silver, not just whatever silver they may hold there. Remember, COMEX available or eligible silver, registered silver, has to be in the form of the good delivery bars. You can't trade even silver eagles, not tubes, not monster boxes. Has to be in the size and fineness that the COMEX designates. However, back in September, they had such silver in large amounts of about 43 million ounces. And back in July of 2016, they were under 20. So Coins and Things, Brinks, and JP Morgan all doubled. Well, Brinks doubled, JP Morgan doubled, and Coins and Things increased their silver in their vault by about 6 or 7 fold. But then an interesting thing happened this month. Since I do track this pretty much every day, Brinks is pretty much where it was at the beginning of the month. At 43.6, it was at 43.7 or something. So they haven't really gained or lost much. But Coins and Things, when people are going to start a conspiracy here that CNT is trying to corner the silver market because they increased from 39 million and change all the way up to 40 million.7. So they have gone from about 4 million ounces to, it's actually a tenfold increase now, to 40.7 million ounces. Now, many people talking about CNT trying to corner the silver market, but 40 million ounces, that is a large amount of silver. That is a top 3 American Silver Eagle year, if they could just get that silver and melt it down into silver eagles. So a big change there. Now, let's look at JP Morgan, because that's what the title is. I think we said they lost another 1.193 million ounces. Now, the whole idea of JP Morgan having silver is that they have it for the long term, that they're holding on to it. They've been buying it for years now, probably since 2012, 13, 14, 15, whatever, and they've been buying it at those prices. When the price was 25, 20, 19, 20, 18, they bought it at very high prices, and they're probably still buying it now, is the theory. And that they're holding it for the one day when they just allow the price to rise and then they're going to cash in all that silver. Well, if part of their silver is being held at the JP Morgan depository, they've lost since the beginning of September 4.166 million ounces, as you can see. Back on September 8th, that number was 145,408,090. And as the most recent update, it's at 141,241,561 ounces. That is a loss of 4.166529 ounces. Now, to me, that doesn't mean anything. I don't believe in this story. But if JP Morgan was holding on for dear life for its silver, there wouldn't be any reason for them to shed 4.166 million ounces in September. Unless you think, well, they wanted to cash in on that 20-cent rise from 14 to 14.20. Doesn't make much sense to me at all. But, again, there have been periods of time. In this chart, you can see most significantly, probably around July 2016, they probably lost a couple of million ounces. But in general, they've been increasing the amounts in the vault for quite some time. I don't think this means anything, but I mean, you can speculate. You can say they're selling. You could say it's somebody else's silver and they've sold. You could say it's JP Morgan silver and they're just moving it out to a secret location. I don't know. I'm just presenting these numbers. I don't believe in these theories, but I think if you're going to follow these theories, you're going to have to try to pigeonhole these facts, or if you can believe these numbers, into whatever theory you want to ascribe to. I myself don't ascribe to any particular theory about JP Morgan and silver. And I think that's all we have on the charts tonight. And seen the Brinks. Oh yeah, I just want to show you the COMEX. By the way, these are Nick Laird charts. I try to mention it. Sometimes I forget. Over at Gold Charts or Us, he has a fantastic subscription service, $180 a year, and you can track. He tracks so many different gold and silver metrics and puts them all into chart form. Well, that's where I'm getting these particular charts from. But the COMEX warehouse overall, back at the beginning of the month, now this only includes the total amount of registered and eligible, was at 296 million ounces, which, you know, there were these other theories out there that COMEX was going to default because there was no silver at the COMEX. And I don't know where you get that from. I'm not showing it to you, but there was a point where the amount of silver that was registered was low. They had, I think it was like in 2000 and a couple of times where the registered amount was low, but there was always the eligible amount. And remember, if there was ever an issue with shortage of registered and the price goes higher, clearly a lot of people holding the eligible silver will simply register it. But the idea that there's no silver available, if you can believe these numbers, and people do believe them, because if you want to believe that JP Morgan has silver numbers, you have to believe that JP Morgan has that silver in their vault, and therefore you'd have to add that into what the other COMEX depositories say they have in their vault, and that's how you get to this 296 million ounces that are supposedly held in eligible form, some of it registered, some of it not, at their vaults. Now that number has changed this month as well, in part because JP Morgan has shed $4 million. That number overall has gone down about 5.5 million. Brinks shed a little, some of the other COMEX vaults shed some as well. But you can see there's enough silver there to meet demand. Now a lot of people, they like to show this owners per ounce concept, which means that if everybody who had a contract, and if they all had it and they wanted to then cash in and receive physical delivery on their contracts, obviously they couldn't do it. And people have used rightfully, it's the concept of fractional reserve in a way, because it's the same with your bank. Even a rich individual may have $100,000 in his bank. If he goes to the bank on a given day, the bank's not going to have $100,000. They probably don't even have $10,000 in the bank. In fact, in the United States, I think there's $2 trillion worth of cash outstanding, and this is according to the Federal Reserve, about 1.2 trillion of it are overseas. Now, what's interesting is the amount of money in the banking system is hundreds of trillions. So there's very little cash. I think it's there's only 8% backing. Think about this. The money that's out there in supposed cash that you have in your bank account in digital form is only backed about 8% by physical dollars, which is no backing at all. So an unbacked currency doesn't even have physical representation backing. And what's happened at the COMEX is, yeah, there's 290 million ounces there, and most of the traders on COMEX, the vast majority of them there, they have no interest in taking physical delivery. So that's why COMEX never defaults. If anyone wants to stand for delivery and all that nonsense that you hear, if someone really wants silver, they go out and they buy it. Full stop. They don't play around with contracts. The reason they play around with contracts is either they're hedging their positions because they're precious metals dealers, or because they're trying to make money, they're commercials, whatever they are, they have a vested interest in getting a fiat profit, not taking delivery of silver. Now, they can take delivery, and on occasion they do take delivery, but the vast majority of contracts on the COMEX either expire by their terms or they just simply get rolled over. They don't stand for delivery. And the concept that someone's going to stand for delivery and crush the COMEX, it wouldn't work. And the idea that someone would try to do that, they get booted off the platform. The COMEX has rules, just like a casino. You act up and you act in a way that's hostile to the casino, like counting cards, they'll take you in the back room and chop your fingers off. You can't go on a COMEX and stand for delivery for something that doesn't exist with the intent of collapsing the COMEX. They will shut you down. They will kick you out. They will cash settle you. They'll make sure you get investigated. It's not going to happen. That's not... No one would try it because you would lose. The Hunts brothers weren't even trying to collapse the COMEX, and they got shut down. What did COMEX do? They just changed the rules. They said, oh, all you can do now on COMEX is sell silver. You can't buy any. Well, that drove the price down, and out the door they went. They went bankrupt Silver Tuesday or Thursday, whatever it was. Okay, let's take a look at the comments we have tonight. Carl Joseph DeMarco, let's get this ball rolling. Good evening. Looks like only me today. No, people joined you, Carl. Oh, good to see. Bellen GP. Something most people forget is that JMP is a bullion bank. That is correct. They represent holders of silver who want to lease it to the market and make interest. Yes. So it makes sense that the silver in that vault would be held on behalf of clients. And it would also make sense that they would make a market themselves, leasing silver. But the idea that what doesn't make sense to me, and I've had this discussion with people, and they say, sure it does. JP Morgan, they argue that JP Morgan would amass this silver over years so that 5, 10, 15 years later, when the price finally rises, they would make this money, and that would make sense. And the reason I say it doesn't make sense is they're a public company, and holding onto an asset for years is dead money. And by the way, under this theory, it's been dead money for 5, 6, 7 years because the price has gone down. So they've been holding silver probably at an average cost under the theory, $17, $18, $19, $20, $21. And just to hold it, it's bad use of capital. Because as I say, they can trade, and they do trade, and they make $100 billion in revenue a year and $24 billion in profit. Having this lying around is dead money. Now, doesn't mean that they're not doing it, but it's not something that the current management would be in favor of, because they need to deploy capital. They need to make money on a quarterly basis so they can boost the stock price. Having money lying around in silver, which I don't even think they do. One, because it doesn't make sense for them to do it. And two, there's no evidence that they are doing it. And the reason I say it doesn't make sense for them, there's no evidence that they're doing it, and there's a reason, because it doesn't make sense for them to do it. The only people who would think that they would do it are people who think about silver all the time. It's what happens is when you have a hammer, everything looks like a nail. So your impression is, well, JP Morgan must have all the silver because they're like us and they know silver is money. They know gold is real money, and therefore they're all buying gold and silver, and the price is going to go higher, and they know that, and they understand there's a collapse coming and the reset. That's all insular gold and silver community talk. The people at JP Morgan, I don't even think that way. They're thinking about their next buck, their next trade, the next quarter results. They're not thinking about the collapse. And anyway, let's carry on. Hi, Luis. Art Divis. I was going to ask you last night, but things ended before I could. What does Turkey do? No, it's okay to ask questions. What does Turkey do with its silver? Sorry if the question is off topic. Last night I went through Turkey's pretty voracious appetite for silver. They have the third or fifth or seventh, depending on what year, largest silver mining, not company, but mine in a place, I can't pronounce the Turkish name, but it means Silver Town. And they mine about 200-300 tons a year, and they import about that amount of silver every year. So what were the numbers we were looking at last night were like 400 tons a year. Pretty big numbers, not quite Indian style numbers, but it does raise the question, what are they doing with that silver? I've been to Turkey, and I know they love gold and silver, and I know they give gifts as gold. I haven't been to India, but I hear the same thing. And I know every stall that I saw in Turkey were selling a sterling silver jewelry, all types of different designs and so on. So I would imagine part of it must have something to do with industry, but I would think that Turks have gold and silver as personal investments. I saw something that Turkey leads the world in Bitcoin wallets. I was shocked to see that. I don't know if I believe it. They said 18% of the people in Turkey have Bitcoin wallets. Now, if that's true, and I don't know Turkish people personally from Turkey, if that's true, then maybe they have the mindset that they are, hard asset type where they hoard gold, they hoard silver, and they don't trust their money, which there's no reason to do so. In fact, while I'm talking, I'm going to go and pull up the Turkish lira versus the gold price. Maybe that's how they operate, that they buy gold and silver and they stack it. I don't know culturally what they do with it, and I'm not sure if they have a lot of industry need for silver, so I don't know. I know in India there is a solar industry. There's plenty of middle class jewelry buying. But let's look at the Turkish lira, because the Turkish lira is a really horrible currency, and Turkey also has the largest gold mining production in Europe, and they also are big gold importers. I didn't go through that last night, but Turkey is big on gold, big on silver, versus the lira. And when you have this type of currency that's not very good, it makes sense for the people to put their money into hard assets, or even I can't bring myself to say Bitcoin is a hard asset or even really an asset. It's a digital asset, but there is a perception around the world that Bitcoin, because it's limited in issuance, is I wouldn't say a hard asset, but it's anti-inflationary, and for that reason they buy it. Let me see if I can get this Turkish thing up here for you. There it is, Turkish versus the lira. Yeah, so when people talk about the gold price being down, well, it always depends on what currency you're talking about, and obviously when you talk about, there's your gold versus the Turkish lira, and you can see this is like a 3-year chart. It's pretty much doubled in the last couple of years, even though in US dollar prices it's gone down in the last couple of years. So Turkey is definitely importing a lot of gold. They produce a lot of gold, they produce a lot of silver, and they import a lot of silver. Something to keep an eye on. I'm going to do more research on what they actually do with the silver, Art Davis. I haven't looked into it. I was just coming across that data. Thought I'd share it. Loco, AG prices aren't going anywhere unless your massive physical buying overwhelms the paper. You highlighted this perfectly in one of your recent videos. Either way, I'm young, will continue stacking. The recent video that Jay is talking about is, I think it's the one where I talked about if just 1% of the U.S. working force were to save in silver in small amounts, how much silver would get taken up. And it didn't take much, but to get to like 800 million ounces a year, which would be effectively 1 year's annual silver mining production, but far less silver gets sold than that. And for the most part, if it's going to happen, it's not going to happen from Western buyers. It's going to happen because Chinese, Indian, and maybe even Turkish buyers step up their purchases. But what's happening in India and China and elsewhere, they are trying to move people into a more financialized gold and silver, more digitized gold and silver products, meaning they want to sell gold in digitized form. They want to do ETFs. In other words, get it so that they don't have physical possession, don't have physical delivery. And then as Bella NGP talks about, is then it gets a little dicey, and then they can lend it. And the next thing you know, there's 4, 5, 8, 10, 12 claims on each ounce of gold. The Indian government wants to issue gold savings accounts. Now, you think there's going to be a one-to-one correspondence? You go in there, you give them X number of rupees. They tell you, here's 6 grams of gold in your passbook. Yeah, you'll probably get 6 grams of gold when you go back, but I doubt it's sitting there waiting for you. And that is what's happening. The gold demand, when people buy gold, people buy silver in the United States, they're buying ETFs. They're not buying American Gold Eagles. I mean, there are people that buy them, but the amount of physical gold and silver sales are relatively low, and that's by design. They don't want people hoarding One of the things they actually are more against you hoarding silver because of its industrial value. Gold is less harmful to the economy to hoard than silver, but in India, gold is more harmful to hoard than silver because it impacts their balance of trade. Silver's cheap, so when Indians import a lot of silver, it doesn't really mean much. When Indians import a lot of gold, it could be 8, 10, 12, 14, 16% of their overall imports. Game changer miser. I haven't said game changer in a while. There hasn't been a good gold or silver pump story. I think the commitment of traders was they were trying to get something out of that, but that one didn't go very far. The best one was over a year ago when gold back yuan, Chinese game changer. Any decent Silver Eagle prices lately? Anyone? Well, you can go here. I'll give you these guys. These are affiliates, not affiliates. I have affiliate links where I put links up from these companies, and if you buy from them, then Smaulgld gets a small commission. But so there's Golden Eagle Coin. You can check them out. You can check the prices there. You can also go to SD Bullion. It's not investment advice to buy gold or silver. It's just that if you are going to buy and you are going to visit these sites, if you visit them through these links, Smaulgld gets a small commission. So you can check out what prices and specials and shipping they may have there. All right. Do you think the banks try to control the price of gold here in the U.S. as many gold enthusiasts claim? If so, why? I think they do, and I think they've got it down to a point where they don't have to do it actively. I think they've managed to create an environment with the occasional smash down and the general movement of people. You got to remember, the best way to manipulate gold is not by buying, selling it all day, is by boosting propping up the stock market, propping up the real estate markets, directing through monetary and fiscal policy for people to put their money elsewhere. Discouraging gold and silver, yes. Driving the price down, that's a form of manipulation. But a larger manipulation is generally what they've done is to create these asset bubbles elsewhere. So you feel like a moron for the last 6-7 years when you haven't made any money in the stock market. You feel like a moron because you didn't buy real estate 4 or 5 years ago. You feel left out because you're holding on to silver. And you listen to somebody on YouTube telling you why silver is the most undervalued asset on the planet and why you should have silver. And don't worry about it. It's not that the price is down 60%. It's that you have X number of ounces. That doesn't work that works with the people that really believe in silver. But the manipulation has worked on the general public because they don't buy into that. They don't believe that. Oh, I'm down 60%. No worries. Flesh wound. Keep fighting. Keep stacking. Yes, there are people that think like that. But the masses of people, middle class, rich, poor, whoever, they don't think like that. They hear Trump saying your 401k is up. And then you look at your silver and you say, but my silver isn't. But I still have silver. So I think the manipulation, yes, I think they go in and they tinker with it when they need to. But I think the greater manipulation is what they do with monetary and fiscal policy and just general bashing. If the media doesn't like gold. So I think it's, yes, I do think that they go in, someone goes in and will sell gold short from time to time. And I also think the market does it itself. When you look at that commitment of traders, you got there's usually a certain group on one side, a certain group on the other, and it never goes up that much, and it doesn't really go down that much in a short time period. So yes, I think they did it a lot more. Clearly, they did it a lot more under Bretton Woods. Clearly, they did it a lot more in the 70s when they started getting out of control. And what COMEX did to the Hunts brother was clearly manipulation to get the silver price back down. I think they probably wanted to get the gold price down in 2011 when it shot up because they wanted the QE to make it look like the QE was working. But once the QE kicked in and by the third time, 2013, then I think they were able to not have to pay as much attention to it. All right. Well, I think that's about it, unless anyone has any other questions or comments. I did watch the hearings with Kavanaugh and Ford. It was quite a long process. I don't think anyone came out of that any wiser. There were no stunning revelations. Ford said what she said, and well, it was the he said, she said, but it was 8 hours of it. Now, how will that impact the markets? I don't think it will, but although it'll be interesting to see whether he gets confirmed or not, and that may impact the overall scheme of things, but who knows. All right, well, thank you very much, everyone. We'll be back again tomorrow night, 8 o'clock Eastern Standard Time. Please check us out on well, it's me, but I say we, on BitChute, minds.com, gab.ai, Twitter, Facebook, Google+, and of course, Smaulgld.com. That's the best place to go. After this video uploads, I then take the charts that you saw during the day, during the podcast, and I put them on the blog post so you can see them at your leisure. You can copy them, do whatever you want with them. Actually, don't copy Nick's charts. You can copy my charts. Yeah, so you go to the website and you can see the charts better. You can blow them up. You don't have to find the spot in the video where the chart might be. And also, you go to the website, you can see there's a lot of stuff there, a lot of research you can do on gold, silver, India, Russia, China, and so on. All right, thank you very much. We got a couple more. Do you intend to name yourself as Smaulgld, or is it something more? I don't know. It just depends on how you say it. All right, thank you very much, and have a good night.